In Singapore, some pump prices of 95-octane petrol have risen by 10 cents per litre, the biggest daily increase over the past week. This comes after oil price surges past $100 a barrel for the first time in nearly 4 years. As of 7 p.m, Esso, Caltex and SPC recorded a jump of 10 cents for 95-octane petrol. The price of diesel was also up 10 cents per litre. But Shell and Sinopec kept prices for both fuels unchanged. Now, over the past 7 days, the average price of 95-octane petrol has risen by 20 cents, while the price of diesel rose by 28 cents. Percentage-wise, 95-octane petrol was up by 6.87% over the past week. Diesel prices were up 10.52% over the same period. And Nasyrah Rohim tells us how the rise has affected some companies and drivers.
Watson Wong has been on the road for 40 years. He says he has had to put in longer hours recently to cover the rising costs of fuel. Mr. Wong hopes to get more support from platform operators.
The only thing that we hope those app companies might reduce the levy, the commissions like 20%, all these charges, you see, maybe they can reduce slightly a bit.
This rental company is trying to help drivers like Watson. It's looking at adding electric or hybrid vehicles to their fleet.
As long as this price continue to have a hike, we will expect a certain group of customers will be returning the vehicle early or trying to end the lease earlier. Probably about 20 or 30% of this group of customers.
Another rental company says existing hirers have been expressing concerns about the higher fuel prices, which have increased their operating costs. It adds a number of long-term private hire vehicles are returning their cars or asking for rental adjustments to manage higher fuel expenses. Platform operators and associations are closely monitoring fuel prices movement and exploring additional measures to further support their drivers.
And for more on this, I'm joined by Chong Zhi Xin, who is Director and Head of Asia Gas Research at S&P Global. And also joining us is June Goh, Senior Oil Market Analyst at Sparta Commodities. Welcome both. Now, Zhi Xin, let's start with you. If Gulf exporters were to shut down production temporarily, how high could prices realistically go in Singapore?
I think if you look at Qatar as well as the UAE, they are one of the largest exporters of LNG as well as Brent oil, which is coming from Saudi. So this really wipes off 20% of the market for both oil and gas. We've already seen Brent oil prices exceeding $100 per barrel. And if we look at the JKM price, it has gone up to about $25 per MMBTU. The last time we've seen such a crisis was back in 2022 when the Russia-Ukraine crisis happened, and we saw average LNG prices going up between $30 to $55 per MMBTU. I think that's something that we could see if this outage really continues over the next few weeks to the next few months.
Right, June, let's go over to you now. If oil remains above the 110 to 150 US dollar mark in the coming months, how significant would the drag on Singapore's GDP growth be?
It will be significant. Imagine we were just at $80 per barrel oil barely a week ago, and that number has shot up close to 40% in just a short time. Definitely, this round of oil price increase is hitting harder on Singapore more than any other crisis before, because it is affecting all transport fuels, from jet fuel to diesel to gas or petrol, and also to bunker fuel, of which shipping and container activities are all centered upon. So therefore, it will be likely a big hit to our GDP if this is prolonged.
Yeah, June, following up on that as well, which sectors do you think would be most affected by the increase? We know earlier from the story we've got private ride drivers or ride delivery riders. These are people who are already affected, but who else would be affected, and what are the downstream impact on consumers?
The biggest hit so far is on aviation, because jet fuel has increased by 100% in the last 7 days. And it's particularly stressed because the only way you can get this oil, this jet fuel, is from refinery runs. At the moment, all the crude that Asia, or 80% of the crude from Asia, for Asia from the Middle East is stuck at the Straits of Hormuz. So this is going to be a long-lasting impact on the jet fuel, and therefore fuel is a very big percentage of the aviation fuel cost, 30% or so. The next sector that we will see as an impact is, the transportation fuels, industries that rely on diesels. And another big factor of industrial impact would be on the petrochemical sector. We have seen already force majeure, which is a notice of inability to fulfill contractual obligation for many petrochemical players, not just in Singapore, but also in around the region in Asia, because we rely a lot, I think 60% of naphtha feedstock into the petrochemical industry from the Middle East. Without that flow coming in, the petrochemical industry is unable to run almost at all right now.
Yeah, well, Zhi Xin, let's bring you in again. If we were to talk a bit about how the effect is going to trickle down to the day-to-day Singaporean, especially with Singapore's electricity, that relies mainly on natural gas. But how correlated are oil and LNG prices when it comes to the current crisis?
There is a direct correlation. I mean, when you look at most of our natural gas contracts, they are indexed to Brent oil. So anything where you see oil prices going up to $100, $150 per barrel will immediately see some impact on the electricity prices. One of the interesting things to note, though, is that the higher electricity prices will only take place further down the road, maybe even 5 to 6 months' time. It really depends on how long oil prices continues to stay high. And then we'll start to see higher electricity prices as well. And what this means for consumers is it really would depend on whether oil or gas prices continues to stay high owing to the closure of the Straits of Hormuz.
Yeah, so June, when it comes to the higher oil prices, then feeding into higher cost of living prices in Singapore, especially for goods like food and services like transport, how much would oil prices have to rise to trigger the possibility of inflation?
Frankly speaking, the number has already risen enough for inflation to come in. We just have not seen the immediate hit because it is quite a supply shock right now that and price really just risen drastically over the last 3-4 days. So we will start to see that coming into our daily life very soon. Your cup of coffee will cost significantly more. Your next big purchase of a washing machine to upgrade your home will also likely to increase as this oil will come in as a high price impact, both from the feedstock to produce all these consumer goods and also to transportation fuel to bring those goods into Singapore.
Yeah, June, Zhi Xin, thank you both for sharing your perspectives with us. I've been speaking with Chong Zhi Xin from S&P Global and also June Goh from Sparta Commodities.